Okay, so hello YouTube. This is Jerry D in Tennessee. Let's talk some more about some stocks today. Let me get this out of the way. I'm not a financial advisor and I'm not a stock advisor. This is just something that I do. Maybe kind of like a hobby. I'm trying to supplement my retirement. And please, if you're going to trade in stocks, please do your own research and do not trade any money that you cannot afford to lose, because you can lose money in the stock market. Trade smart, trade informed, trade scared. As some people out here on YouTube say. There's several people that I follow, and they have lessons. They'll teach you how to trade stocks, and sometimes I kind of question some of their advice. Like this one thing, somebody sent me an email. I warned them about this pattern day trading rule. And they watched somebody that's a teacher that teaches people how to trade stocks. And one of the classes, or one of the videos they watched, this person said that it doesn't affect a cash account, the pattern day trade rule. Well, that's kind of yes and no from what I understand, because I've had a warning from my broker, because I bought and sold one day one stock, and then I turn around a day or two later and I tried to buy and sell the next day. But what happened was, when I bought, I was good when I bought. That was my third trade for the week. Okay? The first day that I traded, then got out of the stock, was 2 trades. I bought in and then I traded out. The next day, I bought in. That was 3 trades. Okay? When I tried to sell, a message popped up from my brokerage telling me that I was on the verge of breaking the day trading rule. And I possibly could have my account frozen. And if I had any questions, contact my broker, the support line, call them and ask them about it, and they will explain it to me. So, I didn't make the trade. I backed out. I'm putting my order to sell for my fourth trade. And I called them up, and they sent me to this page. And plus, they talked to me. They explained it. They were real nice. They told, this is what it is. They said, if you do this, we can lock your account for 90 days. And they said, if you want to read up on it, we'll send you the link. They sent me the link. This is the link. If you do a Google search, you can bring this up. This is straight from the U.S. Securities and Exchange Commission. Okay? So, FINRA rules define a pattern day trader as any customer who executes 4 or more day trades within 5 business days. So a day trade is if you're buying and selling on the same day. If you buy in, you traded. If you sell the same day, the same stock, you're trading out the same day, that counts as a day trade. That's 2 day trades. So, you go into the next day. If you go in another day and you go and buy in another stock, there's 3 when you buy in. So that's 3 day trades in 1 business week, 5 business days. Okay, within 5 business days, provided that number of day trades represents more than 6% of the customer's total trades in the margin account for the same 5 business days. And I was trading with a small account, and it was more than 6% of my trades. So I wasn't trading heavy. I didn't have the money to trade heavy. So, this rule represents a minimum requirement, and some brokers, dealers use a slightly broader definition in determining whether a customer qualifies as a pattern day trader. Customers should contact their brokerage firm, which I did, to determine whether their trading activities will cause them to be designated as pattern day traders. So they will explain it to you. Just call. Most of the brokerages have a 800 number, toll-free number for support, and they will answer your trading questions. Most of them will give you classes online. E-Trade, Ameritrade, Fidelity, most of them, probably Scottrade, Schwab, will have, they're going to have a help section, and they're possibly going to have some tutorials to tell you this is how, what you can and can't do, and this is how you should proceed. So broker-dealer may also designate a customer as a pattern day trader if it knows or has a reasonable basis to believe that a customer will engage in pattern day trading. They are watching your trades when you put the orders in. For example, if a customer's broker-dealer provided day trading training, see, there's the training I'm talking about right there. Follow my mouse right there. Training to such customer before opening the account. The broker-dealer could designate that the customer is a pattern day trader. Okay. So, executes 4 or more day trades within 5 business days. You are termed, most brokerages are going to call you a pattern day trader. They're going to consider it. So when you do that, even if it's a cash account, okay, and you're trading your money, you're not doing a margin account, those trades could potentially flag you as a pattern day trader, and they will call you on it. I know, I've got a message. I had a message pop up to stop me and say, hey, you know, you're trading in a pattern that's a pattern. You're trading, your habits are a pattern day trading habits, and we can freeze your account if you keep going like this. Okay, so under the FINRA rules, customers who are deemed pattern day traders must have at least $25,000 in their accounts and can only trade in a margin. See, it says, and can only trade in margin accounts. So even though you're doing a cash account, pattern day trading, they want you to be using, if you pattern day trade, the Security Exchange Commission says that you should only be day trading with a margin account. Okay, let that sink in. Can only trade in margin accounts. Now, when they say this doesn't affect a cash account, your brokerage can consider you a pattern day trader, okay? If you're trading like a pattern day trader. If you do 4 or more day trades, and that's doing multiple trades in one day. Now, to get around this, you can hold overnight. But if the action's going, like a stock spiking, and it immediately dips, and if you hold overnight, you could lose some money. So you got to keep that in mind too. But you can hold the stock overnight. If the stock's holding its price, sure, hold it overnight, and then that's, your next sale's not going to count as a pattern day trader. It's when you do multiple trades on the same stock on the same day. Okay? But if you're buying, say, let me pull a stock out of my head, off the top of my head. Like if you buy an MGON, which is a cannabis stock, if you buy an MCON, okay, on a day, and you hold it, you don't sell it, you keep it that day, but the same day you're going and buy GRNF, well, you're good because you're not trading the same stock. Okay? So this is how I understand it. Now, if I'm wrong, I hope that maybe somebody will, down below this video, will send me to a link and tell me why I'm wrong. Because if I am wrong, I would like to know why I'm wrong. Because this, from what I understand, okay, the key thing is 4 or more day trades. Okay, and that's multiple trades. Now, this does not specify. This does not specify the same stock. But how it was explained to me from my brokerage was the same stock. But you know what? Another brokerage, the way this is worded, even if you trade, say you trade in buying MGON, okay, and then you go and buy in on Ford, and then you sell on Ford the same day. I don't know. Could they possibly? Because it does not say. It does not say anything about it having to be the same stock. So they could possibly still flag you. It probably depends on your brokerage. And if you have a question about it, I would call the brokerage and ask their support line and ask them, what do you consider a pattern day trader? Don't assume, because you can lock your account up for 90 days. Okay, this is I mean, tied up for 90 days. I mean, they're not taking your money away from you, but it could be the same if you're stuck in a stock and the stock is dropping and it keeps dropping and for 90 days you can't get out of it. That's a problem. You're going to lose more money the longer you're in that stock if it keeps dropping. So, okay, let's go back. Customers who are deemed pattern day traders must have at least $25,000. Now, this $25,000 is a balance. This is not including the trades, from what I understand from my brokerage. They do not have to consider this $25,000 as what you have invested in some stocks at the time. This is cash money sitting in your account that you can trade with. $25,000 or more sitting in the account, and it does not include, if you just sold a stock and you made $5,000 on that stock, that $5,000 does not clear from at least 2 days. I was informed by somebody else that Charles Schwab may wait 5 days before it clears. Excuse me. So that is not including money that has not cleared. Okay? At least not to my brokerage. Now, it might be different for your brokerages. I would do the research and find out, because if you're going to day trade, you're going to go and buy stocks and flip on spikes, you need to know how your brokerage handles this. This is very important. You don't want to lock your account up for 90 days. Do not get your account locked up for 90 days. Okay? 25 must have at least $25,000 in their accounts and can only trade margin accounts according to the SEC. And this is the stock police. Okay? We are talking stock police. So I'm just wanting to bring this out. I was asked about it by somebody I know, and here's a chat. I didn't fully understand it. This is back in 2019, okay, when I was first getting into it, and I just found this out, and I got the warning on the stock, and then somebody followed me on Twitter that's like, "Hey, Jay Farrell, Charles Schwab canceled my ability to trade. You got a clue why they would do that?" Okay, so I had run into the message and stopped and did not go any further, and had already talked to E-Trade, but I couldn't remember exactly because I misguided him here, 60 days, but I correct myself later. So if you have less than $25,000 in an account and you sell and buy the same stock one day, they will lock your account for at least 60 days for short selling. So I didn't fully understand it, so that's not a real clear explanation, but what I did, I sent him a link to go read about it. And then I said there was a good YouTube video, I'm still looking for it. And then I sent him the link for the YouTube video. And the YouTube video was very well done. And the guy was explaining how the pattern day trading rule works. So, and then I corrected myself here. Now that I review the video again, you get locked for 90 days. And that's what they do. They lock your account for 90 days if you break that pattern day trading rule. Your brokerage can determine how far they let you go before they lock your account. Okay, so it may change from brokerage to brokerage, but they're going to pretty much go by what the SEC has set forth, because I'm thinking they can get in trouble if they do not follow the rules. So the guy thought, thanked me. He said he was drinking the Kool-Aid, and then later, I asked him, did they unfreeze your account? And he said, yes, sir. So I could lose another $5,000. So he went into a bad trade. The stock dropped, and he lost $5,000 on that. He said, I need to start short selling. So it might have been because he was locked up and he couldn't get out of the stock and it dropped. The price of the stock dropped and he lost $5,000 on the trade because he couldn't sell, he couldn't get out of it. So I'm not showing the name of this person's account or anything because I do not want to, draw attention to this person, because this is not what it's about. I'm not going to mention the other class that a friend of mine had been taking and had asked me about this, because I don't think their video, when the video come out, I watched the video. They sent me a link to the video, and I was tempted, and I don't want to go down this route. I'm going to let them correct their own video. I'm not going to go and try to trash talk them or anything like that, because that's not what I'm about. And this should be a community where we help each other, not hurt each other. But anyway, I don't think this other company's video, I don't think they meant to come across the way they did with their video. I think they were looking at it on the side of, if you have a margin account, you have the money in the bank. And he said, and let's go back to the wording here, because he said it doesn't apply to the cash account. Well, it says, and can only trade margin accounts, and that's what I think. This is my opinion. I could be wrong. If somebody knows better than that, call me out. Put the comment in there. Send me a link to something that actually, something that's legitimate and is a fact. Okay, because this right here is the SEC, U.S. Securities Exchange Commission. They are the stock police. Okay. These guys have the power. They come after you. They think you're doing something shady in stocks. So, but right here it says in black and white, can only trade in margin accounts. So I think in the video lesson, what the person was meaning when he made the statement, it does not apply to cash accounts, is this rule specifically says that you can only pattern day trade with a margin account. They do not want you day trading with a regular cash account, and this is for your protection, to help prevent people, especially new people, trading in the stocks from blowing their whole account fast. So they want to limit how many trades you make to prevent you from losing all your money in a short amount of time, which you can still do it, and you could probably lose all your money in one trade if you're on the bad side of the trade. But if you do a quick Google search, include SEC, the letters SEC, like it was one word, just like this right here, sec.gov, pattern day trader, you'll bring this up. It'll come up in Google. Read it for yourself. If you still have a question, I would call the brokerage I'm using, Ameritrade, Scottrade, E-Trade, Fidelity, Charles Schwab, whatever. There's a ton of these guys out here that you can use. So call your the particular company that you're using. Find out for a fact so you don't get your account locked. This is very important. This could cost you. Okay. Now let's go another route. Okay. Let's talk about something else. Well, it's kind of sort of. It's the same thing. So what? So some of them's thinking, can I get around this? And these guys that teach stocks, they kind of tell you how to work around pattern day trading if you have a cash account. You could do this, okay? So here's how. If you have a account, if I had the money, okay, and I wanted to do more, okay, more than 4 of these trades. You know how you get around this? The easiest way to get around this? Use separate accounts. Now, I will tell you that my particular brokerage, I have 2 brokerage accounts with one company. They're treating both accounts as one. Okay? They're treating both accounts as one. So, this won't work if you use the same brokerage. You have to use a different brokerage. Like you can use E-Trade for one, and you put some money in Ameritrade, okay? So you go in one week and you want to make a trade on Ameritrade, okay? You go in, you buy in the stock, it spikes, you get out same day, right? Okay. So that's 2 trades. So what if you hear about another stock? You're watching Twitter, whatever, or you're on one of these lists, and they're like they send out a watch list. You've got your stocks there. You're watching the prices on the stocks in your watch list on your brokerage, and this other one's going to spiking. You want to get into it. So you already have 2 trades on E-Trade, or Ameritrade. Sorry, I started out with Ameritrade. So go to your other brokerage like E-Trade, be it Scottrade, be it Charles Schwab. I think I heard Charles Schwab doesn't like people to pattern day trade. But anyway, just use a different company. Okay? Don't use the same company. Use a different company. Go make your next trade off of that company. And it won't count. It'll be a different account. And in that in and out trade would be 2, but it's in a separate company. So that's not going to be as obvious. It's probably a little shady, okay? It could be if the SEC, I'm not saying to do it. Let's go there. I'm not saying to do it. I'm saying that's a way you could probably get by and do it. And that's probably how some people are doing it, day trading, without having $25,000 balance in their account. Is jumping between different brokerages and using 2 or 3 different brokerages, E-Trade, Ameritrade, Scottrade, something like that, going that route. And you're not going to get caught on it like you would if you use one account, because I believe they do watch your account, and I believe they're going to call you on it, and they're probably required to warn you before you make the last trade, and that's why I got my message popped up. And that protects them. And they're like, well, we warned him, and he still made the trade. And then when you make the trade, then they lock your account, and then you're done for 90 days. You're locked up. You can't trade. You can't buy. You can't sell. You can't do anything with the account for 90 days. I mean, you're just done till they release it. So that's it in a nutshell. This is my understanding. This is my experience. And reason, again, I made this video is I had a friend that had contacted me, and they're like, well, this trading guru says that you can trade multiple times a week, and it doesn't affect them at cash account. This pretty much says if you're going to pattern day trade, that you can only do it in margin accounts. So if you do 3-4 trades in a week, when you hit that 4th trade, they're going to say, hey, one, well, you could have 25,000, but if you don't, they're going to say, one, you are under 25,000 in your account. 2, you're using a cash account and you're not using a margin account. And that's just my experience from my brokerage. Some other brokerages might handle it different, and that's why I said you need to call them and ask them. I would call them if you have any questions. Most of them will answer just whatever questions you got about trading, and you're using a company. Use their help services and find out if you got questions. Ask them, and that way you know how you should go forward. But I appreciate you watching the video. If you hung out this long, if you liked it, put a like. I'd love for you to subscribe to the channel. So, if anyone, I'd love to hear some comments on this, because this can be a confusing thing, and you hear so many different explanations about this, and I'm just thinking, you don't want to get your account locked. I would ask the brokerage, tell me about this pattern day trading rule, and can I do it? What can I do what can I do if I want to try it, if I want to do it? Can I do it without getting my account locked up? And what are your rules, and what is the fine line that you have to cross to get your account frozen? Just put it straight to them, and they will explain it to you exactly how it works. Most of them don't want you to short sell. They don't want you to be in and out of the stocks, because they really would like for you to buy the stocks and hold them and wait for the stocks to go up, be it months, years, what have you. That's how they would like for you to trade the stocks. They don't want you just flipping the stocks on a day-to-day basis. And the people lose money every day for doing this. If you're on the wrong side of the stock, the trade of the stock, then yeah, you can lose money real fast. This is a serious thing. So study, learn how the mechanics of all this works, and ask questions if you have doubts. And maybe the best person, like I said, to ask is your broker that you're using, the company that you're using it. But again, this is straightforward. This is the rule from the U.S. Securities and Exchange Commission, the people that set up the rules for all this, and they control everything. They can lock and will lock your account if you break it. So that's my 2 cents, and I'd love if somebody has a different understanding of the rule and they can explain it, put a comment down below this video and let me know, because I'd be interested. I really want to understand it. I think I kind of have an understanding of this since I have talked to E-Trade about this. And I just mentioned who they were. Anyway, yeah, since I've talked to my broker, I should, I know I have an understanding of how they look at this. Let's put it this way. So anyhow, is there anything else I need to say? I think that's pretty much it. So this is my understanding of how it works. If anybody's watching this video, anybody's curious, I hope this helps somebody. And I strongly encourage, I am serious, call your broker and ask them. If you have any questions about this stuff, anything concerning your stock trading, your stock account, I would ask them. And they will tell you up front. They will be very, very upfront and direct about how it should work, and how the rules work and how they see it. So a lot of it's going to depend on the brokerage that you're using to trade. So anyway, thanks for visiting my channel, and thanks for watching, and I hope to see you in the next video. You have a good night. Hey, thanks for coming by. Glad you checked out the video. I hope you liked it. If you like it, please click on the like button. And if you're not subscribed to the channel, would like to invite you to subscribe to my channel. May God bless you, and I hope you have a good day. Bye.